Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital, and it is Thursday, May the 4th, and want to take just a brief minute to discuss what markets did last week. As we got all those big cap tech earnings in last week, you saw the large cap indice, the S&P 500, move up 87 basis points off of the strong earnings that we got from those big mega cap tech names last week. However, the small and mid cap indexes did not perform as well, with the S&P 400, the measure of the mid cap, down 38 basis points, or down 0.38%, and the small cap index, as measured by the S&P 600, was down exactly 1% on the week. So small and mid continue to be the laggards here over the large cap, very liquid names. Now, we discussed the reason why this is a couple weeks ago, but just to hit on that again, there's more liquidity in these larger cap names, meaning more shares trade and things move, and it moves more quickly. And when it moves like that, there's not as much volatility in pricing in these equities, so they don't move as much up or down as some of these smaller that trade on less volume. If you have less bids, there's more of a spread up or down, which your stock is going to move, so it creates more volatility. So investors have been sitting on the sidelines, really wanting, especially at the beginning of this week, waiting to hear what Fed Chair Jay Powell was going to say yesterday on Wednesday during the Fed Bank meeting for the month of May, in the commentary at 2:30 Eastern time that he had after that. Now, what sent markets higher initially was they took out the phrase that said that they were going to essentially continue to heighten rates until they were in restrictive territory. They've now said that they need to determine if further rate hikes are necessary based upon data, which investors believe that was the pause language and the pause rhetoric. But as we got into the press conference yesterday, you heard Fed Chair Jay Powell say a couple of things that really, for us at River Place, were really a little disconcerting. And the first one was when he said the banking system remains incredibly strong and resilient and is stronger than it was a month ago. Well, while we're seeing that, the regional banks continue to see pressure and stock sell off. As you see some of these banks like PacWest and Western Alliance down 40-50% as we're speaking right now today off of this rate hike, because what's pressuring those small and regional banks is they had to borrow short, and they've been borrowing short for many, many years. So they've borrowed at very, very low interest rates, and they're lending out money over time. Well, when they borrowed all that money when interest rates were low, when interest rates go up, the value of that bond goes down. And so that's what is causing a lot of panic in these small and regional banks. And so with the Fed continuing to raise rates, there seems to be a little disconnect on the stress that is happening in the banking sector. Now, we're not saying that this is going to be a crisis by any stretch, but just a little disconnect between the Fed and what's really happening out on Main Street. The other thing he said that sent markets down yesterday, and why we finished the day negative, is he said that he believed that inflation was going to remain higher for longer and that rates were going to have to remain restricted for longer. So the stock market and the bond market had been pricing in the Fed actually doing a rate cut at the end of this year, or maybe a couple rate cuts at the end of this year, as economic activity slowed down. Well, he put a kibosh on that yesterday by saying that they were going to stay restrictive for longer, as they believe inflation will remain higher for longer, higher than their 2% target rate. So what does this all mean? So if we are looking at this market as a whole, it has been incredibly volatile this year. And if you are positioning yourself versus what was working last year in the value sector per se, you are not doing too well this year. And I wanted to point out that while the S&P is still up 5% year to date, and it feels like it's been a hard-earned 5% with all the volatility that we've seen so far through the beginning of May, but all of your returns are in just a handful of about 10 mega cap tech names at this point. But the growth sector of the S&P 500 is up about 12.5% year to date, while value sector is actually negative 1.3%. So if you were in what was working last year, you're probably lagging significantly behind the market this year, and you probably didn't want to get out of those positions because you may have had some short-term gains locked in there, and you don't want to sell, and those short-term gains create taxable occasions. And if you're buy and hold investors like we are at River Place, we're always looking for great companies that are going to grow over time, regardless of what the immediate economic impact or economic environment is. And so we're always positioned to see growth over the long term, so we can wait out some near-term volatility for long-term gains. So what I would encourage everyone to do, the adage has been sit on the sideline in 6-month T-bills getting close to 5%, a little bit over 5% now on those notes, and sit on the sidelines and wait this volatility out. Well, I can't time the market. I can't tell you when a great time to get into the market is, but I can tell you there's a lot of cheap stocks out there right now, especially in the small and mid-cap space, that are great companies and great industries that continue to grow, that have just gotten beaten down because of the economic environment, not because something in their business situation has changed or in their prospects has long-term changed. So if you're able to see through the short-term economic environment to think long term, you have an opportunity in this market to pick up some great values. So if you have questions about how to do that or what are some good values, call us. We'd be happy to talk to you about that. We'd be happy to point you in the right direction. So you can reach us as always at 904-346-3460, or as always check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thank you so much.